If you are worried about a bear market, which I know many of you watching this video probably are, do not worry, there's many different ways you can handle it, one of them being Cigna. Cigna is a very good stock that has performed well historically in bear markets. Why is that? Well, it's not tech, it's healthcare, which usually does well. I mean, if there's a serious recession, yes, it's going to go down just like all stocks do because people start liquidating 401ks. However, if we're just talking about a period of stagnation, a period where people are out on tech, things like that, Cigna is going to do just fine. Well, obviously, I cannot predict the future. I don't know exactly how the stock's going to perform, but if past indicates the future, this is a stock that is successful. It's a very good value stock, and in the most recent bear market, it did particularly well. I'm talking about 2022. Look here, late 2022, early 2023, it was hitting highs fairly significantly. And comparing this to the S&P 500 during that time, I mean, we can even go late 2022. You maybe weren't hitting your all-time lows, but you were pretty near it. You were in the mid 300s compared to being in the low 400s back then. And during that time, Cigna, this is when Cigna was, like I said, they were dramatically higher. If you're going from what? Let's just compare directly. Basically beginning of 2022, late 2021, you were there, and then you fell to high 300s. Late 2022, early 2021, you were 200s. You ran up all the way to where we are today, almost exactly in the 300s. That's because it's a stock, it's a company that's doing well despite tech not doing particularly well, and vice versa. When tech was doing incredible, we saw it dip down a little bit. Of course, there's many things that might have been with the specific company that might have drawn it down. We saw it doing pretty well during when tech was hitting highs in 2024. Actually, no, it was pretty low too. I mean, I think it was right around that June, July point when tech was really on fire, and people kind of get excited about tech. They take some of that money out of the value, they put it into tech, and in a bear market, vice versa happens. People pour money out of tech, less or more risky stocks, and they pour it into what they view as less risky stocks, which Cigna is. Also, if we are looking at performance is important. We don't want to hold a bunch of duds, preferably. This is a stock that's done well over the last 5 years. It's up 127%. That is outperforming the S&P 500 by a significant margin. It just is 127%, and your dividend is higher, near 2%, just under 2%. That is greater than the S&P 500. It's not just a 5-year time frame. If we zoom out, the chart looks good. Going back to early 2015, which by the way is after a crazy high run, you're still about performing in line with the S&P 500, maybe even a little bit better. I haven't actually checked the exact numbers, but I know it's about 200%-ish over the last 10 years for the S&P 500. But like I said, the dividend is very likely to be higher. And that's after you went on a crazy run, because from lows in 2009, you ran up nearly 100%, over 100%. Yeah, from 11-ish to 120-ish in that time frame. So it's done very, very well. You might be worried about PE. 26 looks high for a value stock. It's not actually that high. You got some non-GAAP, or more like GAAP throwing off non-GAAP. So PE isn't 100% accurate. The forward PE margin is a lot closer to reality. But even if we're saying, okay, it's not 11, let's say it's 15. You're still dramatically below the S&P 500 PE, which is sitting in the mid-20s right now, I believe it's in the mid-20s. Dow Jones, I know, is right around 25. So this is a company that's A, significantly cheaper, B, has performed in line or better, and C, does well in a bear market, which I've covered this stock on my channel before. You can search it up. Basically, no one watched it. That's fine. You guys don't have to. But I'm going to keep making videos on stocks like this, even if no one watches it. Why? Because it's stocks like this that no one cares about when there's a full-on bull market. Everyone's going up 100% on AMD. And don't get me wrong, I love my AMD going up 3,000% on NVIDIA. And stocks like this get ignored. And then when the bear market comes, everyone's like, oh crap, I got to get in on this. And then those of us who are holding value stocks as some percentage of our portfolio are going to do very, very well on it. And like I said, this is a stock that has a very long track record. Of course, there's always weird thing that happens internally with companies. Anything can happen. There's no guarantee this company is going to continue to go up. But if we're betting on anything, we want to bet on a value stock in a bear market that has performed better than the S&P 500 for a 5-year time frame, matched it for a 10-year time frame, outperformed it for a 15-year time frame. Like, this is a very, very, very solid company. It just is. And like I said, healthcare is a industry, it's a field that's going to do fine in a bear market. People still need that specific stuff. Now, like I said, if we're talking about a recession, full-on recession, yes, it's going to go down because everything goes down. But if you're talking about a prolonged recession, it's still going to recover much better than something like a tech stock. And at this point, I don't think we are talking about a full-on recession, at least not what I hear. And you can even see here the 1 month time frame. It is basically performing exact opposite of S&P 500. Why is that? It's because when money pours out, yeah, some of it's going to CDs or bank accounts, people are worried, but a lot of it is going straight into value stocks. This is one of the ones people think of. Vici was another, right? You're going to get your dividend off that. This is a company that's just going to do fine in a bear market, not a full-on recession, but a stagnant market. It's going to be an industry, a company that grows no matter what. Why is it growing? Because I know my YouTube metrics too. Quite a lot of you are pretty old, and you're going to need a lot of healthcare coming up. That's just the reality. And the percentage of the population, both numerically and percentage-wise, per capita, is becoming older. So this is an industry, this is a company I don't want to just hold during a bear market. This is a company that I want to hold all the time. I do. I hold a significant portion of this stock specifically for these reasons. Not only is it going to perform very well during a bear market, it's probably going to get inflated versus deflated. And then you can, if we're hitting serious lows in tech like we saw in Meta in 2022 or AMD and TSM in 2022, you can take a little bit of that Cigna out and you can buy it into that. It's not like it's going to run up 300%. And then once tech recovers, you can transition back. That's what I personally like to do. I don't view it as trading. I view it as investing. I view it as shifting money around, taking opportunity of what the market is giving you. But you got to be patient with it because that's not something that's going to pay off in a month, 2 months, 3 months. It might take 2 years. But if we're patient, we're smart with this. But still, I want to hold Cigna all the time. I do. It's a good company. Even in a bull market, it's going to perform fairly well. Yeah, it's going to get a little bit of people pouring out of it. Okay, I like this better, I like that better, whatever. But still, this is a stock in a company that's proven itself, and we want similar ones too. I do think I've covered most of what I wanted to in this video. If you guys have any questions, feel free to ask me in the comment section below. But this is a stock I like. I like it often. I like it all the time. I certainly like it in a bear market. If you don't have any, now's not the worst time to get in. It's not like it's ran up 3,000%, and it wouldn't anyways. But this is a company that's going to do well. If you truly think a bear market's going to happen, or a stagnant market, it's probably going to, if tech's running sideways for a year and a half, it's probably going up because it's going to grow marginally, and people are going to keep pouring out of tech. If tech's going sideways, certainly if tech's going down. But I appreciate all of you for watching. If you enjoy, like and subscribe. I'll catch you next time.